yen and the stock market in Japan, because that stock market had been going up for literally 2 years. It was at record high. And everybody decided to go to fixed income in Japan, to Japanese government bonds, rather than stock market in yen. So two things happened. The yen appreciated, the stock market collapsed, and the yield of those government bonds in Japan went really down again, which is kind of crazy. But that was really what, the other side of the story. People focus on the US. Without that monetary policy normalization, or the starting of that in Japan, that Black Monday, 5th of August, wouldn't have happened. So Japan was extremely important.
Did you know that Japan is the largest foreign holder of United States Treasury securities, a strategic investment that ties its economy closely to the United States? Yet, in today's world of shifting geopolitical alliances, could Japan's close economic relationship with the United States be under pressure? In this video, we'll explore the delicate balance Japan maintains between its Western alliances and the emerging global influence of BRICS, as well as the risks Japan faces with its significant investments in United States Treasury securities. Japan, often seen as a global economic powerhouse, is navigating a complex world. As part of the Western alliance, Japan has long enjoyed close ties with the United States and Europe. However, with the growing influence of BRICS and the increasing competition in global markets, Japan is at a crossroads. Can Japan continue to thrive in a world that seems to be pulling in different directions? Let's take a closer look at the unique position Japan finds itself in today. Japan's investment in United States Treasury securities has long been seen as a bedrock of its economic strategy. As of September 2024, Japan holds approximately $1.128 trillion worth of United States Treasuries, making it the largest foreign holder. This investment is critical for maintaining financial stability and currency strength. But as United States interest rates rise and geopolitical tensions escalate, this position becomes increasingly risky. A weaker United States dollar and rising inflation threaten the value of these investments, leading to potential losses for Japan. So, why does Japan continue to maintain such significant holdings, and what risks does it face? Japan's accumulation of United States financial assets, including Treasury securities, began in the 1960s and 1970s, when the country experienced rapid economic growth. By the 1980s, Japan became one of the largest foreign holders of United States debt, bolstered by trade surpluses with the United States. Through decades of economic booms and recessions, Japan's strategy of investing in United States Treasuries helped stabilize its economy. Even after the financial crises of 2008, Japan's position remained strong, continuing to invest in safe haven of United States bonds. But now, in the wake of the global pandemic, rising inflation, and geopolitical shifts, Japan's strategy is evolving. Major Japanese financial institutions, including Norinchukin Bank, have begun reducing their United States and European bond portfolios, moving towards alternative investments as they face losses in bond portfolios due to rising interest rates. Additionally, the weakening yen and local bond yields are making domestic investments more attractive. Japan is no longer just looking west, it's exploring ways to safeguard its future. Between March and May 2024, Japan's Treasury holdings dropped significantly, from $1.87 trillion to $1.128 trillion, as Japan sold off over $59.5 billion in United States debt in a strategic move to manage its financial risk. But this shift also reflects a broader global trend, de-dollarization. The term de-dollarization refers to the gradual move by countries to reduce their reliance on the United States dollar for international trade and financial reserves. This trend is particularly evident in countries like China, Russia, and members of the BRICS alliance. For Japan, this shift presents both opportunities and challenges. While still firmly allied with the West, Japan must now consider how the growing influence of BRICS might reshape the global economy. If you like this video so far, please like, subscribe and comment.
Just to summarize, the yen had been attractive for carry trades because it was a stable currency with zero and below zero interest rates, as you mentioned, for over a decade, for 18 years. Then in March of this year, the Bank of Japan, the BOJ, started raising rates, and it raised them again on July 31st. Now, does that mean a scenario like we saw last Monday could play out again if the BOJ raises rates again?
BRICS, Brazil, Russia, India, China, and South Africa, has emerged as a powerful economic bloc, with a growing influence on global trade and finance. Recently, BRICS has been advocating for alternative reserve currencies, such as the Chinese yuan, and has called for a more multipolar world economy. This shift represents a challenge to the dominance of the United States dollar and has led many nations to diversify their currency reserves. For Japan, a country heavily invested in United States Treasuries and integrated into the Western alliance, the rise of BRICS could reshape its economic strategies. However, Japan finds itself in a unique position. While it remains a key ally of the United States and a member of the G7, Japan is also an economic giant in Asia, a region where BRICS holds significant sway. Balancing these two worlds is becoming increasingly difficult as global alliances shift. Although Japan is part of the Western alliance, its economic survival depends on strategic decisions that look beyond just the United States. Japan has maintained strong economic ties with both the United States and China, its largest trading partners. But recent tensions between the United States and China, along with Japan's shifting financial strategies, raise questions about Japan's future position in the global economy. With rising inflation and the potential for further United States interest rate hikes, Japan faces a dilemma: continue relying on United States Treasury securities, or diversify to mitigate risk? In 2023, Japan's Ministry of Finance intervened in the forex market, selling United States Treasuries to support the yen and combat the rising costs of imports. The yen's depreciation and inflation concerns are central to Japan's decision-making process. At the same time, Japan's domestic bonds are becoming more attractive, with local bond yields rising and currency risks diminishing. Japan's move away from United States Treasuries is part of a broader economic realignment. Japanese institutions are now looking to invest in domestic bonds, infrastructure, and new technologies. This shift reflects Japan's need to protect its economy from external shocks while fostering long-term growth. But what does this mean for the future of Japan's economic relationship with the United States? A significant reduction in Japan's holdings of United States Treasuries could lead to rising yields in the United States bond market. Higher yields mean higher borrowing costs for the United States government and potential disruptions in global financial markets. If other countries follow Japan's lead, the long-term dominance of the United States dollar as the global reserve currency could be at risk. De-dollarization is gaining momentum worldwide, with countries like Russia and China advocating for alternatives to the United States dollar. For Japan, this movement presents both risks and opportunities. As Japan reduces its United States Treasury holdings, it must navigate a world where alternative currencies, like the Chinese yuan, are increasingly being used in international trade. Despite these global changes, Japan remains committed to protecting its economy. With rising geopolitical tensions, particularly between the West and BRICS, Japan's financial strategy reflects the need to hedge its bets while maintaining its role as a key player on the global stage. Japan's future is being shaped by a delicate balance between its historical ties with the West and the new realities of a multipolar world. While the country remains aligned with the United States, Japan is also adapting to the rise of BRICS and the shifting dynamics of global trade. By diversifying its investments and focusing on domestic growth, Japan is positioning itself to remain resilient in the face of economic and geopolitical challenges. As Japan continues to navigate its economic future, one thing is clear: this is a country that knows how to adapt. From its post-war recovery to its modern financial strategies, Japan is a nation that remains at the forefront of global economic shifts. But as the world changes, so too must Japan's approach to maintaining its influence and prosperity.
Yes, because there is still, and this is the Bank of International Settlements own calculations, at least 40 trillion in yen positions, short positions. Yeah, so Japanese investors overseas, mostly in the U.S., also Australia, in some cases in emerging economies, which need to be at least partially unwound. So it is not over.
With that said, thanks for watching, and until next time. Please like and subscribe so you won't miss out on our new videos. Thank you.